Hey, what's up, stock compounders? Brad here. Wow, it has been a long time. I have missed you guys. It's been a busy couple of weeks, but I am back for our Q&A, usually weekly Q&A. It's been a couple weeks since I've done the Q&A, but I'm excited to dive in today. Also, I want to invite any of you who are regular watchers of these Q&A videos, if you feel inspired, write down each topic with the timestamps and send it to me, and I will pin it in the comments and give you a shout out for doing that. Much appreciated to any one of you who feels inspired to do that. Okay, let's dive into the Q&A. First one, mind sharing how high is your conviction in Prosus? Do you see it as potentially a long-term holding? My conviction in Prosus isn't as high as it is in, say, Micron or Seritage or Alibaba, but it's high enough for me to have dipped my toes into Prosus, and I do anticipate holding it for a decade or more. Okay, I do see Prosus as a long-term play, and it's really that's the framework I'm gravitating towards is really only wanting to invest in these long-term plays. That's really what I'm hunting for. What do you think about combining the fundamentals of value investing with technicals? Instead of buying regardless of the technicals, only buying into stocks when they experience dramatic discounts, like Alibaba recently. So I know I don't really pay any attention to technicals. I've never really gone there. But when you talk about dramatic discounts, to me, that's included in fundamental analysis, okay? Fundamental analysis is trying to estimate what is the value of a share of a business, okay? And, margin of safety, right, is what can I pay for that share versus what is that share actually worth? So for me, a core part of fundamental analysis is that margin of safety. Okay, how big is the discount to the intrinsic value of a partial stake in a business? So I don't pay any attention to technicals. Margin of safety or discount is pretty important to me. More and more recently, I'm looking for companies that have a long runway, a lot of growth ahead of them. So margin of safety is becoming a little bit less important as I kind of adjust my investment framework. But there's always a chance that we make a mistake, right? We don't project what the business is going to do correctly. And buying with a margin of safety means we can make mistakes and still have a positive outcome. So there is still a lot of importance in buying with a margin of safety. Thanks for your content. Absolutely. I'd like to ask you about one thing in relation to Shinnikin, which is a real estate company in Japan. One of the valid bear points is related to macro, namely rapidly aging population. Surely it would affect the real estate business, but isn't that almost fully offset by Shinnikin via life care segment? So I'm not smart enough to know, with the aging population, how much that's going to pull away from the core business versus how much that's going to contribute to the life care segment. I can't estimate exactly the impact on those two aspects of Shinnikin's business. And to me, Shinnikin was so compelling from an intrinsic value margin of safety perspective that this didn't factor into my purchasing of Shinnikin. I think last year, time is weird. I have two small kids. Time is completely distorted, so I don't even really remember when I bought Shinnikin, but I think it was last year, and it was really just a small stake in Shinnikin in my daughter's retirement account. So not much to say on that macro question related to Shinnikin. Hope you're doing well. Thank you. Thank you for the great content. I have the following questions. How do you invest using the magic formula? Okay. How often is the list revisited or updated? So Joel Greenblatt put a website together called magicformulainvesting.com. It's updated daily, and I myself buy every 3 months. Okay, I add to my Magic Formula portfolio every quarter. I'm going to be doing another ad at the end of this month, end of September. So what is that, 17 days or so from now. So stay tuned for that. How do I invest using the Magic Formula? I have a number of filters that I apply to the Magic Formula list. Every 3 months, I pull that list. I apply my filters, which include, do super investors own this stock? According to Dataroma. Is the stock written up in Value Investors Club? How high is the insider ownership for that company? Those are the big three. And then I look at kind of debt levels as compared to operating income, and a few other things. Actually, at the end of this month, I'm going to incorporate 2 new factors that I picked up from Terry Smith. I'm going to look at return on capital employed, and I'm going to look at gross margin. Okay, I'm going to look at those 2 metrics over time, say over the last 10 years, to see how consistent they were and how strong those 2 numbers are. So keep an eye out for that as well. Second question, how do you approach reading an annual report? Since it has a lot of content, is there a way to process, a process via which you navigate through the information? Yeah, I mean, this just comes with experience. Over time, you figure out which sections of the annual report are most important. I like to look at the risks. I like to look at what management, thinks the business is going to achieve, right? The goals for the business in the near term. I like to look through past annual reports to see what previous goals have been and were those goals hit, right? And if they weren't hit, did management own up to them not being hit, or was it just glossed over, right? Did management take responsibility for the results, particularly if they were negative, and own up to why those weren't achieved, right? So there's a lot to be gleaned from the annual reports. The financials, how are the financials progressing through time? So, I mean, it's all in there. You just have to, it just takes practice to know, okay, where do I want to go first? How do I really get a full sense of this business? Which information is worth really chewing on and which information really isn't meaningful to the investment thesis? And it doesn't take long. You read annual reports for a little while, you very quickly figure out how to be efficient with processing those annual reports. Hope it's not too late, but this is a good question that I can't find the answer to. What metric made Amazon bullish during its low period as it wasn't its PE ratio? Now, I'm not exactly sure what you mean by Amazon's low period. What I would do with regard to Amazon is go through the Nomad Investment Partnership letters written by Nick Sleep and his partner Case Zakaria. And I would just pull up the document of all of those letters through the Iggy Foundation. And I would just do a search for Amazon. And I would just look at everything that Nick Sleep said about Amazon over the years and understand how Nick Sleep analyzed Amazon, right? What were the metrics he was looking at? Because it wasn't the PE ratio, okay? So take a deep look at Amazon through the eyes of Nick Sleep. I think that will bring you a lot of value. May I ask which stocks are in your watch list and why? So currently there really aren't any stocks on my watch list other than what I own, okay? And that's, my current focus is really diving into the frameworks of great investors like Terry Smith, which is the last video I put out. that's really what I'm sinking my teeth into now, as opposed to particular businesses that I'm considering investing in. It's investment frameworks by great investors. That's just kind of where I'm at in the moment. That's what's I think most valuable to me right now. So there's not anything on my watch list that I don't already own. I would say the company I'm most intrigued by that I don't own is Twitter. Okay, I haven't done any kind of dive on the investment case for Twitter, but it's intriguing from the perspective of I'm getting more and more value out of being a user of Twitter. And I'm getting more and more curious about what the investment thesis might be. Where is Twitter going to be in 10 years? What is their plan to really unlock value from that platform? They deliver so much value. And it seems like in terms of dollars, in terms of profits, they haven't captured but a very small percentage of the value that they're actually delivering to their users. So I'm very curious about how that's going to unfold over the next decade and even more. I want to thank you. Absolutely. You're welcome. My question would be around circle of competence. Do you feel that you can put Micron, Seritage, Alibaba in your circle of competence, or are these bets simply shameless cloning of Monish Pabrai? I guess another way to say this would be, would you have been comfortable to have such large position in these stocks without super investors holding them? Thank you. So, with these three companies, obviously Monish Pabrai does own them. They're fairly large positions for him. Most of getting into those positions were inspired by Monish Pabrai. As I own them longer and longer, I learn more and more about them, right? So and I don't really think of, understanding businesses as circle of competence, okay? To me, it's more of a gradation of competence. So that doesn't really resonate with me. Over time, I'm learning more and more about these businesses. Obviously, there's still a ton that I don't know about them, and I'm okay with that. I think the big test here, as a corollary with circle of competence, is would you still own a business if it dropped 50%? Okay, the price dropped 50%. Would you still be comfortable owning that business? And in regards to these three, Micron, Seritage, Alibaba, I would be. I would have no problem continuing to hold these in that event that the price dropped by 50%. I probably wouldn't have found them, right? If Monish Pabrai and other great investors didn't own them, right? If there weren't 13 Fs that I could look at, probably wouldn't have come across these companies. So I'm very grateful for the 13 Fs. I'm grateful that it's so easy to figure out what great investors own. So that's my number one source of ideas is what are great investors buying? What have they bought recently in large quantity? Love your high quality content. Thank you. I have a question about Tencent. Compared to Alibaba, which have competition from JD, Pinduoduo, I don't see any direct competition for Tencent. I think there's more CCP anti-monopoly regulation coming in the future. Thoughts? Yeah, I really like Rob Vinal's take on this. You can read that in his most recent letter, which I believe is public. I got access to it anyway. I think it's on Twitter through Rob Vinal's account. To me, it's the really important thing here. When something like regulation in China is making the news, it seems to be like this snowball, right? Like every little piece of regulation news that comes out of China, it just piles on top of each other, right? the news media outlets, they know this is a hot topic. And so they're looking for everything they can related to regulation in China to throw onto the front page. Now, the big question is, how relevant is the regulation to the long-term prospects of these businesses? Okay, that is the critical question. Not, is there regulation coming? Is there more regulation coming? Right? Doesn't matter. Okay, the thing that matters is, how will this regulation impact these businesses over the long term, at least as a long-term investor? So yeah, there's probably more regulation coming, and it doesn't give me pause with regards to Alibaba or Tencent. Again, I would highly recommend you go and read that letter from Rob Vinal. You can listen to it as well. He's created a podcast where he kind of reads through his letters, if that's a more convenient format for you. But really appreciate what he put out on that. Any useful resources on how to properly do a valuation for a stock? So valuation is very simple, okay? Not easy, but it's simple. In order to value a business, you really just have to, estimate how much cash the business is going to spit off between now and Judgment Day, okay? A business is a printing press for cash, right? How much cash is that business going to print until the printer shuts down, until the business no longer exists? So the more you understand a business and the industry that it operates in, the more accurately you're going to be able to project those cash flows. So for some businesses, it's very difficult to accurately project cash flows. Buffett talks about technology, how the reason he stays away from technology is not because, it could be a fantastic opportunity for investors. Warren Buffett doesn't know how to gauge the future trajectory of, businesses in that space, because there's such rapid change. Okay, rapid change is very difficult for investors to navigate, because how are you going to project future cash flows? How are you going to figure out what a business is worth? Now, Terry Smith likes to focus on companies that have been around for almost a century, right? The average holding in Terry Smith's portfolio, I think, is like 90 years old. A company that's been in business for 90 years. The beauty of that is, focusing on these industries that are much more difficult to disrupt. Okay, technology can't just come in and quickly displace the current players. There's attributes about those businesses, about those industries, that makes them very difficult to disrupt, right? The moats are quite large, even in this age of rapid technological innovation. So, that's where he likes to focus. But it's simple, right? It's simple, but it's difficult because nobody knows what's going to happen into the future. The best we can do is kind of estimate a range of potential outcomes for the future. And, if we have 10 different stocks in our portfolio, 10 different businesses, and the odds, according to the range of outcomes that we come up with, are favorable for all 10 of those, chances are good we're going to be happy with the outcome, right? We're not going to knock every one of them out of the park, but that's not the game of investing, right? We don't need to be batting 1,000, or I think that's how it works in batting. We don't need to hit everyone out of the park. It's really a probabilities game, and making sure the probabilities of a great outcome are on your side. Recently discovered your channel. It's very interesting. Thank you. I have a more technical question regarding BABA shares on Hong Kong. So I have not bought Alibaba via the Hong Kong exchange. Okay, so I'm probably not the person to ask about this. I would look at Investing with Tom, made a video about Alibaba, specifically about the VIE structure. I think Sven Carlin has put out some content about this as well. My understanding, again, I haven't done much work on this at all, is that the shares through the Hong Kong exchange are also the VIE structure. Okay, so buying on the Hong Kong exchange, you're not getting additional advantage of owning directly. Okay, it's still the variable interest entity structure. But again, I'm not an expert on this. What are your thoughts? How to compare your individual investments in a portfolio to help make decisions about whether you should be watering the plants, watering the flowers, or cutting the weeds and not the opposite? Thanks. Yeah. So to me, this is a question about kind of tinkering with the portfolio, maybe trimming down one position and redistributing those proceeds into another position. I don't like to tinker with the portfolio, okay? And my rule of thumb here is that if it's not an obvious decision to cut out one position and kind of double down on another position, I'm not going to do anything. Okay? I think there's a ton of value in leaving the portfolio alone. That's what I've arrived at. So I how I'm reading this question is kind of tinkering, optimizing, having the biggest allocation and the positions that you're most excited about. That's too much tinkering for me. I like to make around 20% bets when I have a high conviction idea, and I really just want to leave it alone. Okay, I want to let the investment thesis play out, get out of the way. I'm trusting that management team, I'm trusting that business to compound my money for me, okay? I think I'm gonna have a much greater success rate with that than trying to tinker and optimize within the portfolio, okay? I don't wanna do all of that active moving money around in the portfolio. I think I'm probably better off to just do as little as possible, right? Buy in when it feels like a fat pitch and get out of the way. And I think Guy Spear is a really good example of doing that well. And I aspire to have as little activity in my portfolio as Guy Spear. Would you consider starting a position in SRG right now? I don't know what the current price of SRG is. I probably haven't looked at it in a few weeks. It was around 14 or 15, I think. Of course, it's not going to load. And it's right behind my 1529. Yep. So I bought around 10 SRG, and I'm just letting it sit, right? I don't know. I don't know if I'd buy in at 15. That's I'm not sure is the short answer to that. It really depends on, what do you think the property is worth? Do you trust the management team to really execute on these redevelopment projects? You've really got to make that decision for yourself. What are the stocks you're currently researching? Again, it's really just companies that I already own that I'm continuing to kind of dig into and go deeper on. So Micron, Seritage, Alibaba, Prosus. That's really the backbone of my portfolio. Again, Twitter, I'm curious about it. I guess I'm not curious enough to have really dove in yet, but I could see doing that shortly. Are you planning to add more Micron to your portfolio? I am not. Micron is the biggest position in my portfolio, and I'm happy with how big that position is at the moment. I don't need it to be any larger a percent of the portfolio. Surely if Li Lu hasn't bought Alibaba or Tencent in the next 13F, something must be wrong. I wholeheartedly disagree with that. Now, there could be one little thing about Alibaba that Li Lu doesn't like, okay, that's keeping him out. And it may be, purely, it may just have to do with his personal preferences, right? It might be some nuance that he just is keeping him out. So I don't think we can gauge much. Obviously, it'd be more exciting as an owner of Alibaba if Li Lu was full in, right? Someone who understands China as well as Li Lu does. That would be a pretty bullish signal if Li Lu was heavy on Alibaba. But to me, the fact that he is not invested in Alibaba, at least through the New York Stock Exchange, through BABA, to me, I don't think there's much we can glean from that. Okay, at least that's my personal perspective. Are you interested in doing more digging in Li Lu's holdings as seen in ticker? So I want to see currently what shows in ticker for Li Lu. We've got Himalaya Capital here. Micron, obviously I own. BYD, I mean, Li Lu's sold a bit of that recently. It seems a bit frothy. I haven't done much digging into it, but I'm not super interested in digging into a company that Li Lu is trimming. You got Bank of America. I have no interest in owning banks. I really agree with Terry Smith on this. It's just there's so many ways. It's very difficult to fully understand a bank. Okay, it's just, I can't do it. It's far outside my circle of competence, and Terry Smith doesn't seem to be able to do it either. Sorry guys, let me just refresh this real quick. Okay, we're gonna float. Yes. Alphabet. Alphabet is a business I would love to own. Obviously, Alphabet owns YouTube. I'm, making this content for you guys through Google right now. Fantastic business, but it's just not at a price point where I want to get in. Facebook, yeah, I'm intrigued by Facebook, and I'm kind of soured on Facebook. I don't use it. I don't really use Facebook. Instagram, I use a lot less now than I used to. So it's hard for me to get excited about really spending time with Facebook. Apple, phenomenal business. It seems like there's a lot of enthusiasm built in to the price of Apple right now. So I don't love the risk-reward ratio there. And then Pinduoduo, not something I've spent any time with. There is, a fairly extensive, podcast on Pinduoduo from the Investors Podcast. So check that out if you guys are interested in learning more about Pinduoduo. So that's Li Lu's current kind of U.S. portfolio, at least companies that are trading on the New York Stock Exchange. Do you know the multiples when Pabrai Li Lu bought Micron? Yeah, so there's an easy way to find that in Ticker Terminal, which if you guys don't have access to Ticker Terminal, send me a message in the comments. I will share the link that gets you in to Ticker Terminal. So we just scroll down to valuation. And we can look here, we can move this back to 2018. And you can look at last 12 months total enterprise value to EBITDA ratio. And I think Pabrai got in somewhere around here, okay? I think Lilu was a little bit later. So Pabrai, about a 2 times EV to EBITDA ratio. Pretty phenomenal. And then, you can see it's gone up quite a bit. It's come down a little bit recently, kind of peaked near a 10 EV to EBITDA ratio. But that's the very easy way to find multiples like that is in Ticker Terminal. Love Ticker Terminal. It's still free. It's possible that they'll be charging for it soon, but I highly recommend getting in there while it's still free. I have a question on Reysas. Do you have details of the company, annual reports, and any other relevant docs in English? I'm finding it very hard to understand as it's posted on the company's website. Yeah, someone on Twitter messaged me a link to the English versions of the annual reports for Reysas. I need to go back through and find that link. I'm going to try to do that and post it for you guys in the description to this video. But if I forget to do that for whatever reason, hit me up on Twitter at @bkellner and ask for that. Ask for that link to the English annual reports for Reysas. Can you please do a full video deep dive on PCYO? I think, what is that? Pure Cycle. That's one that I saw in corner of Berkshire and Fairfax, water utilities. I'm pretty sure there's a write-up for this on Value Investors Club. It's not really a business that I'm very interested in, to be honest. I love the small market cap at 328 million, but I can't quite wrap my head around the business. I certainly can't project what this business might look like in 10 years. So I don't plan on doing any work on Pure Cycle. Any update on Reysas? Were you able to buy on Fidelity and through which account type? Yes, my order on Fidelity went through. It's a Roth IRA that I transferred over from TD Ameritrade to Fidelity. Took about a week for the funds to clear, and then I was able to call the international trade desk and place a limit order, and it went through the following day. So, and I think I placed the limit order right at, the market price that was showing on Ticker Terminal. So, no problems. And, just watch that video on Reysas. I talk about how I bought it through Fidelity. There's the number right there, the 800 number to the international trade desk. It's all there. So check that out. Similar to you, I hold Alibaba shares, in my case via Hong Kong. I have been very convinced in holding the shares despite all the news and articles about the tech crackdowns. However, the latest Reuters news about the Chinese government wanting to take Didi under state control and Alibaba publicly committing to invest $15.5 billion for common prosperity starts to concern me. I have also seen this video below of Chamath about his interesting take on recent developments in China. I am curious about that. I will watch that. Haven't yet. Love to hear your thoughts on this. Yeah, I don't have many thoughts on that, to be honest. It seems like common prosperity is really something the government wants to prioritize to make sure, people don't get left behind in the sort of progress happening in China. But I don't have any particular take on this as it relates to Alibaba. What criteria do you use to choose the super investors you follow? So I want to see sort of return track records, investment performance over at least 15 years, okay? Because I want the global financial crisis included in that history, and obviously whatever has happened recently with the pandemic, and I want concentrated, right? I want a concentrated portfolio. because if somebody has done really well over 15, 20 years, but they have 500 stocks, right, kind of Templeton style, that is very hard to clone. And I'm not particularly interested in cloning that model. Bill Ackman with 7 stocks, that is fantastic. I love that. So that's basically what I look at. How have the returns been through at least 1, ideally 2 market crashes? Because that really exposes people when they're leveraged, when they're outperforming the market, not through skill, but juicing the returns through borrowed money. If you get at least 1 crash in there, that tends to expose investors that are doing that. Would you rent or buy a home if you had to start again at present day? Would I rent or buy a home? I don't think it matters that much. I don't look at my home as an investment, okay? I learned this early on from Robert Kiyosaki, Rich Dad, Poor Dad. Homes take money out of my pocket. Okay, I'm either paying rent or I'm paying a mortgage. Okay, so it's not an investment, right? It's a liability. It's, in this case, it's a necessary liability. I need somewhere to live. You can make it an asset if, say, you buy a 4-plex, right? And you live in one of the units and you rent out the other 3. Now, I'm not interested in being a landlord. Okay, so that's just not something I'm interested in. Obviously, real estate investing is a whole big thing, right? It's a fantastic place for a lot of people to do very well investing. I actually explored real estate as an investing avenue a couple of years ago, and it's just not for me. It doesn't suit my temperament. I want to be a passive owner of a business that generates money year after year after year, rather than being involved in real estate. I think I'm not an extrovert. I'm an introvert. I don't want to be, so much of real estate is building relationships and kind of managing people and labor, and that's just not where my interest is. And I find, a lot of engineers tend to gravitate more towards investing in equity versus playing the real estate game. Monish Babrai as an obvious example of a guy who's just found investing in stocks is just a much better fit for his temperament than some of these alternatives. Curious what your buy price and conviction position size was for Reysas. I've been playing with this idea for quite some time. Placed a limit order for 411, got filled, placed a 20% bet. My bet on Reysas was somewhere around 10%. That, my highest conviction ideas are around 20%. So that's where Reysas falls in terms of conviction position size. And my buy price, I don't exactly remember. Let me see. See where Reysas is now. And my screen is going to cover it up. So 457. I think it was around 405 or something. Yeah, right around $4 or 4 Turkish lira, I guess. In USD, it was, why didn't that flip? USD. In USD, it was, I think, somewhere around 50 cents. 40, 45, 50 cents, somewhere in there. And my throat's starting to get a little, losing my voice here, so we're going to end this pretty soon, but let's take a couple more. If you were to do a case study for 1,000+ mature companies, how accurate do you think looking at historic financials are to predicting future free cash flows? Well, first, I think you have to define mature companies. Okay, and Terry Smith has done studies about this, where he looks at different industries looks at the mature companies in different industries. What is the return on capital employed been? So I think you have to define mature company. And then I would look at it kind of industry by industry, where you see how well the past correlated with the future. But as Monish Pabrai has said recently, I don't know that there's much value to looking at aggregate numbers like that, averages. Because in the business world, there's so much nuance. Each business is so different, okay? And so I don't know how much value this is actually going to yield in terms of being better at picking individual companies. With regard to the risk of delisting, again, I don't know that buying through the Hong Kong exchange mitigates any of that risk. What YouTube channels centered on value investing do you suggest besides the one of the Punch Card Investing crew? Yes, definitely look up each channel for the Punch Card crew. I would say Monish Pabrai would be number one. All of you, I highly recommend subscribe to Monish Pabrai's channel. Watch every video that he puts out. They're usually Q&A sessions with him, an hour, hour and a half, 2 hours. And I just get so much out of those. I make a summary video after each of those because they're just so valuable. There's so much in there, and I want to really drill those lessons in. And then I would say Sven Carlin is a great channel. Check him out. I find that of the people that find my channel, most of them are also subscribed to Sven Carlin's channel. Okay, there's a fair bit of overlap between people who are subscribed to me and people who are also subscribed to Sven, and he's a great value investing resource. So check him out. Is it true that it says stock compounder on your birth certificate? You guys, this is coming from the guy that really inspired me to make a video every day, to really commit to growing this channel. So I owe a lot to Tom. I'm going to have to check again. I haven't noticed in the past that it has said stock compounder, but like every time I read great books, right, like Poor Charlie's Almanac, different things jump out, right, that I hadn't noticed before. So it's possible my birth certificate says stock compounder, I just haven't noticed it before. I would definitely notice now. So I'll have to take another look and get back to you guys. Okay, last one. Let's do this last one. Thank you for the contents and finding information to share with everyone. Absolutely. And really, I'm just documenting my journey, guys. With regards to YouTube channel, everybody's always talking about create, right? There's a lot of, it's intimidating to think of, yourself as a creator, right? Oh, I have to create this thing from scratch. I'm really just documenting what I'm doing. It's so much easier. And it's more fun, right? There's no pressure. I'm just saying, hey, this is what I'm learning, guys. Maybe it's valuable to you as well. That was a sidetrack there. What kind of mistakes are you currently making or made in the past relating to investing, buying and selling stocks? If you can do it all over again, what is the one thing you will change in your investing life? Whew. What mistakes am I currently making? I think one mistake I'm making is delaying really digging into which investors are worthy of cloning. Okay, I kind of have my big investor list of investors that are worthy of cloning: Buffett, Pabrai, Lilu, Munger, the big names. But there's great investors that are much smaller, okay, kind of flying under the radar. And, I just need to do it, guys. I need to pull together the tools to find these people, make a list, populate some data in the list. How long have they been investing? What has been their performance? how many stocks do they currently hold, what have they bought recently, and really put some effort to that endeavor. So it's time to do that. Thank you for that poke. If I could do it all over again, what is the one thing you will change in your investing life? I guess just not starting a YouTube channel earlier, right? Not investing earlier. Yes, that is the answer. That is my answer. I wish, like Warren Buffett, I had discovered the power of compounding at 11 years old and realized, hey, I need to tap into this immediately, because the longer my runway is, that's just going to do wonders with where I end up. Okay? That is the one thing I would do over again. In fact, why not 5, right? I would have started much earlier and found Buffett much earlier and really integrated the principles that Warren Buffett operates from, that has allowed him to just crush it since he started investing over the last, what is it, like 80 years? Something insane. 80 years of compounding. Okay? If I could give one gift to myself, it would be 80 years of compounding and shameless cloning and everything I know today. So anyway, that's a great way to wrap this in a bow. Sorry to all of you whose questions I didn't get to. Please ask them on Friday or Saturday when I put out the next community post for these Q&A solicitations. So with that, thank you all for watching. Again, if you're inspired to create a list of topics that I covered here with timestamps, it'd be really helpful to me. I will pin that in the comments and I will give you a shout out. So again, thanks everyone, and I will see you in the next video. Take care.